The cost of Bitcoin hopped from around $21,100 to $23,450 soon after the FOMC declaration. Financial backers ought to take note of that. This upthrust has been great, however doesn't appear to be feasible. A day-to-day light close above $25,000 would nullify this negative expectation. The cost of Bitcoin encountered a strange flood in purchasing tension as the U.S. Federal Reserve declared a 75 premise point climb in the government subsidizes rate. Albeit unsure, it tends to be accepted that this conduct was because of the Fed's choice, which lived up to the assumptions of general society, as well as going with remarks that proposed demolishing monetary circumstances and a lull in the speed of additional increments. Notwithstanding, one necessities to comprehend how this new flood affects Bitcoin and the crypto-biological system. The cost of Bitcoin has had areas of strength for with the financial exchange since the COVID crash in March 2020. Subsequently, occasions influencing conventional business sectors assume a critical part in deciding the course of BTC. On July 27, the FOMC meeting declared a 75 premise point rate climb, the second continuous rate climb. What is intriguing, in any case, is that the last time this choice was made on July 13, BTC out of nowhere plunged lower and made a lower low. Misfortunes were immediately recovered as the cost of Bitcoin recuperated and set off a meeting. Looking back, the swing low framed on July 13 was a nearby base that catalyzed a 28% meeting for BTC and generally 65% for Ethereum cost. Maybe the most striking contrast between July 13 and July 27 is assumptions. Whenever the Fed declared the initial 75 premise point increment, the group was expecting a 50 premise point increment. As genuine outcomes beat assumptions, the business sectors fell momentarily. Notwithstanding, this time it is widely known that the Fed planned to raise the rate by 75 premise focuses. Despite the fact that such a huge leap in loan costs might have prompted a downturn, the outcomes were in accordance with assumptions, which could be one reason why the cost of Bitcoin set off the departure. Another explanation could be the remark that went with the rate climb, which recommended that the economy was dialing back and the pace of rate climbs could dial back appropriately from here on out. Regardless of the bob from the FOMC meeting, what's in store actually looks negative for BTC cost. As portrayed before, the cost of Bitcoin seems, by all accounts, to be framing a negative banner on the 4-hour outline. This continuation design contains a sharp downfall, the flagpole, which framed in June, finishing with the solidification of the banner, which shaped essentially in July. The example predicts the continuation of the past downtrend when the cost goes past the banner. The FOMC-driven rally has pushed BTC higher to retest the banner highs, yet is probably going to pull back as financial backers take benefits. Expecting the cost of Bitcoin falls beneath the banner base at $20,603. The hypothetical strategy for foreseeing the objective proposes a resulting decline to $11,717. This level is gotten by adding the level of the flagpole to the breakout point. While financial backers ought to be careful about this assembly, they ought to likewise know that it can likewise move higher assuming specific opposition levels are penetrated. For this situation, in the event that Bitcoin cost shuts the everyday candle above $25,000, this would discredit the bear banner situation and deal a potential pattern inversion prompting greater costs. Thanks for watching. Friends, I really need your support, so if you liked this video, please like, subscribe to the channel and write any comment right now.